Hi everyone, hope you had a wonderful week. This is Victoria from crushcrypto.com and welcome to this week's market update on the crypto space. Bitcoin prices continue to rise this week with a 14% gain. Prices actually fell by around 3% for a few hours on Friday after South Korea announced that it too was banning domestic ICOs. But prices recovered pretty quickly and is up more than 7% since that announcement. The market reaction was much calmer this time compared to the China ICO ban a few weeks ago. The market basically shrugged it off within 12 hours and continued its upward trend. Compared to Bitcoin, Ether prices saw a milder increase of 5% this week, but like Bitcoin, Ether fell by 7% momentarily after South Korea's ICO ban, but has already gained all of it back. Meanwhile, Ripple increased 11% on heavy volumes and took over the number 3 position, bumping Bitcoin Cash down to number 4 in terms of market cap. Ripple has been expanding its operations and just last Monday announced they are opening up a new office in Singapore to better service the Asia-Pacific region. NEO also made it back on the leaderboard after rising by 70% over the week with extremely heavy volumes. There were news floating around that NEO's founder was consulted by Chinese authorities on the recent ICO ban, with speculation that NEO may collaborate with the Chinese government and play a future role in the Chinese blockchain infrastructure. Token prices recovered this week with many tokens showing double-digit gains. This could be a sign of more positive sentiment in the market now as investors are flocking back into both altcoins and tokens. Qtum and EOS outperformed this week with 43% and 25% increases, both on very heavy volumes. Kyber Network made it onto the leaderboard after an impressive run since it was listed on September 24th, and they are up by more than 500% from their ICO price. Kyber now has a market cap close to $300 million, and prices are up by 23% so far in trading today. As I mentioned last week, this is one to watch in the coming weeks. Although not on the table here, Chainlink is another token that we have been keeping an eye on since it was listed on September 20th. The token is up more than 330% so far from their ICO price, with a market cap of $138 million. For both Kyber and Chainlink, please take a look at our reports if you want more information on these projects. And finally, Gas, which is the fuel token for the NEO network, also made a strong recovery like NEO with a weekly gain of 83%. The token is up another 20% in trading so far today, with a market cap of $272 million. So on to the major developments in the crypto market this week. South Korea joined the bandwagon and announced on Friday that they are also banning domestic ICOs and margin trading in cryptocurrencies. This includes all forms of ICOs in South Korea, but so far does not restrict Koreans from participating in foreign ICOs. Regulators said that ICOs need to be banned because of rising fraudulent schemes, and they may implement more measures to control cryptocurrencies. Right now, cryptocurrency prices in Korea are slightly lower than elsewhere, which is different from the past few months where prices usually trade at a premium in Korea. Although the market share of the South Korean Ethereum exchange market fell from 33% to 23%, South Korea still secured its position as the second largest market for Ethereum. Meanwhile, in the US, the SEC filed charges against 2 ICOs this week called Recoin and Diamond Reserve Club. This is the first time the SEC has filed several fraud charges against ICOs and the individuals who launched them, which in this case was actually the same person. Recoin had proposed to use proceeds from their ICO to purchase real estate assets. The founder told investors that he had raised between $2 to $4 million when the actual figure was closer to $300,000. For Diamond Reserve Club, he claimed he could get diamonds from wholesalers at a discount and promised investors sizable gains from arbitrage. In total, he scammed hundreds of investors, a total of $300,000. Interestingly, before the SEC filed any charges, there were already warnings by others since July on various forums that these were potentially ICO scams. This is a reminder that it is important to always conduct thorough due diligence on the ICOs you are interested in participating, and maybe scan the web or forums for any warnings from other people, and be extra skeptical if anyone promises or implies a particular ICO can generate outsized returns. While there have been a lot of news on ICO bans and warnings these past few weeks, it doesn't mean the end for this still very new financial innovation. In the US, a blockchain-focused subsidiary under Overstock announced this week that it will be launching the first platform for the legal trading of tokens categorized in the US as securities, kind of like the New York Stock Exchange or NASDAQ for security tokens. This new platform will be regulated by both the SEC and FINRA, and the securities tokens traded will be SEC compliant. This could be a big step for crypto tokens, as there are currently no legal ways for US investors to trade in security tokens. And as you may recall me saying 2 weeks ago, a Chinese official was quoted on national TV that China's ICO ban is only temporary and licensing will be introduced. And shifting away from ICOs, there were positive news though this week that supports blockchain technology and cryptocurrency. In the US, the Trump administration reiterated their commitment to blockchain technology to help improve US government operations. At a conference this week, 2 senior White House officials emphasized that the technology is increasingly being viewed as essential to US policy and strategy considerations. This is not the first time the US government has taken a bullish stance on blockchain, with some hinting that adoption may happen in the coming years. Several US government agencies, including the Centers for Disease Control and the General Services Administration, are currently experimenting with blockchain pilot projects. Meanwhile, regulators in Japan announced that they have approved 11 companies to operate cryptocurrency exchanges. The licenses are aimed at tackling fraud without hindering innovation and require licensees to adhere to strict requirements such as segregation of customer accounts and so on. The Financial Services Agency in Japan said it is reviewing an additional 17 license applications from companies seeking to operate cryptocurrency exchanges. This latest development is in line with the country's crypto-friendly stance so far. The government recognized Bitcoin as official legal tender in April earlier this year, and Bitcoin is now gradually being accepted at many merchants in Japan. Some sources estimate 300,000 stores in Japan could accept Bitcoin by the end of this year. Recently, Japan once again became the largest Bitcoin exchange market with over 50% market share of the global Bitcoin exchange market after traders exited China following its recent clampdown on Chinese crypto exchanges. To add to that, there were news circulating this week that banks in Japan are creating a digital currency called the J-coin as a new payment option to eliminate cash. The coin may be put forth for regulatory approval before the 2020 Olympic Games in Tokyo. According to the preliminary plans, the coin would be exchanged at a 1-to-1 ratio with the yen. This development is in line with the idea that governments around the world are looking to start their own cryptocurrencies. In a recent study by Cambridge University, 20% of central banks surveyed said they will be using blockchain technology by 2019, and 40% said they will have active blockchain applications within a decade. The CEO of Fidelity, one of the largest investment management firms in the world with over $2 trillion in assets under management, said they are committed to cryptocurrency. At a Bitcoin-themed conference in New York this week, Abigail Johnson said that the company has made investments in several Bitcoin-related businesses, and she is personally a proponent of cryptocurrency. In fact, she was quoted as saying, "I'm one of the few standing before you today from a large financial services company that has not given up on digital currencies." She also announced that Fidelity's customers will soon be able to see cryptocurrency balances on Fidelity's website if they held an account with Coinbase, which is one of the largest providers of storage and trading services in cryptocurrency. According to TechCrunch, Fidelity is now the largest financial services firm to be speaking publicly about its cryptocurrency operations. One of Fidelity's projects is actually mining Bitcoin and Ethereum and has been making a decent profit for them. And that concludes our weekly update. Thank you very much for watching. Please also check out our weekly report at crushcrypto.com for links to more news articles from this week. If we have missed anything notable, or if you have any comments on what's happening in the market right now, please leave us a comment. Have a great day and we'll see you again next week.